What is up, stock strategists, crypto connoisseurs, and technical traders? You're back here at Stock Picks with Tim. I'm Tim, and it's nice to see you guys again. Hope you guys are having a good night. I wanted to get into really quick how you're going to sell puts for some easy money. This is what I do for passive income. It's pretty easy. You don't need a whole ton of money. A lot of people think that with options, with getting assigned buying 100 shares or whatever it is, you think that it costs a lot of money, but I'm going to show you 4 stocks right now that really, the entry point is like in the $1,000 range, so it's not too hard to get there. But let's get into this real quick. I'm going to show you guys a couple stocks here. I'm going to show you Clsk, I'm going to show you Ford, Indi, and Bngo, and I'm going to show you how to sell a put in all 4 of these. And actually, with one of them, I decided to go the other way and to buy a call. Selling a put for Clsk. Here you have in the green circle, you're looking at 85 for your max profit. This is the premium you're going to get right off the bat for this contract, and you're basically on the side of buying 100 shares, which means this is your max loss here, because when you get your premium, you take that from the total that you're going to have to spend for those 100 shares, which would be 1,250 because you're buying 100 shares, so you times this by 100. But you take that 85 away from it, which would leave you with a max loss of 1,165 if you get executed in the contract by, in this case, September 17. So we're looking at a little bit less than a month here. You'd make a quick $85 profit if it does not get executed, meaning if during the from here until 17 September, if it doesn't hit that 12.50 strike price, you are going to just get that $85 and you're on your way. You can put it into another option or do however you want to do. Now, if it doesn't go exactly the way we plan and it goes to 12.50 or under the strike price by September 17th, then you are looking at still getting this money, but you are looking at also having to buy 100 shares. So now in the purple circled, I have that I sell a put for the date of 17 September 21. I mean, this looks like a pretty juicy one. Now, you do have to hold this for a little under a month, so there is risk there. I'm going to go to the next Clsk put that I was considering, and this is a little bit less risky. This one is kind of a more risk, but still, I think a pretty good risk to reward ratio. And this is if you're happy to own Clsk, or if you're looking for an entry point, you're already maybe well diversified, you might consider wanting to do this just to get a position in Clsk. Because say it does go down, you're looking for like a 12.50. You're looking for a 12.50 buy-in, right? And say it goes to 12.50 and you're planning on buying 100 shares. Well, wouldn't it be better if instead you would sell this put? You get that $85 profit, which means basically you're buying the shares for $11.65 instead of $12.50. You'd be essentially buying the shares for $11.65. Doesn't that sound a lot better if you're already planning on buying 100 shares at $12.50 or something, for instance? So that's why it can be a really good way to go selling puts, and a lot of people don't know much about selling them. So that's one way to go, and it is technically a bullish option because you are okay with buying those shares if they hit a certain price. You're not buying the put, you are selling the put. Now, let's go into the next. It's still a Clsk, but it's a little less risky, I'd say. And I'll show you on the charts in a little bit, but look at this. The green circle, we've got 15 for your max profit, 985 for your loss. So that means since it's a $10 strike, you're going to be buying 100 shares at $10. That's a even $1,000. Pretty simple to look at it like this. It might kind of give you guys a better idea. So your premium comes off of that $1,000 because you're making the premium, and you're losing that if you buy the shares. You're not really losing $985. You're losing that much money towards buying shares. So it's really not a bad thing if you're planning on buying Clsk at $10. So and the same thing, the 17th September, and that's the price you'd get. See, the risk, the risk is very, very low compared to the last one. A good one to go with, it's a quick $15 profit over less than a month. I mean, that's not big money, but you're still getting a decent little gain. And like I said, if you guys are still planning on buying shares down the road, this is one way to do it and take advantage of the premium as the time goes on, especially if this stock just keeps trading sideways. You're getting that premium over time, But this one is definitely one that I'm considering, and I'll show you guys the chart I'm actually considering the 1250 more because I'm okay with having more shares. Now when you look at this, this was the blue trend line I drew from a couple days back. Now see how we bounce off of it. This is about 1250 where we bounce off. You know, we hit the 1250, but we broke that 1250 and it actually gapped down, and this was with the earnings. Really gapped down, and then look at, we filled that gap already, and right after we filled that gap, we just started kind of trading sideways now. And Bitcoin had a decent little rally. Bitcoin now isn't looking too fantastic, so we could have a considerable little drop. And you know, obviously these options are going to change when the market opens. The prices will all be different, but I'm just kind of giving you guys examples of things to look for. Now when you want to chart it, basically I'd probably go with that $10 one. Definitely now knowing where Bitcoin's at right now at about 47,000, it's kind of been selling off a little bit. So I'd probably highly consider the $10 strike, because there's just like, we haven't even hit $10, you know, so that's just a very low risk one you can go with. In my opinion, I'd personally probably go with that $10 one, knowing that unless Bitcoin overnight, maybe you wake up and Bitcoin's back close to 50,000, then I'd possibly consider the 1250. But yeah, that $10 one seems pretty good for the price. I mean, you're making $15. It's very little reward, but I mean, the risk is extremely low, and that's a good one to go with there. Now let's go back to the pictures here. From another one, I'm a pretty big fan of Ford. I like the stock. It's a pretty steady stock. I see the recovery coming. You know, it's not seen as an EV play right now. I mean, the PE ratio is like, I think it's under 15. It's crazy. And so for this one, this is a $12 strike. Same date, 17 September. Less volatility. The implied volatility is very low. Now you're looking at a 1190 break even. Your max loss is 1,190. Your max profit's $10. Now, I mean, that's not very much, but you could, like I said, you know, you could definitely have a couple of these contracts going through if you have more cash. Say you got $10,000 you want put down. That's a potential $100 over less than a month. Just holding some Ford stock, you could always go with some different options. But this is just an example. And risk-wise, I think it's pretty low. We're going to look at the chart for Ford real quick. Might as well. Now, when you look at it, after hours shouldn't really affect it much. Also, guys, if you don't have close to 1,000, if you're maybe around 500, here's another one, an $11 profit, because there's more volatility with this. Just like Ford is, you know, close to that $10 profit, but this is more volatile, which means there's a chance, according to the algorithm and everything, a higher chance for it to hit that strike. But when I look at the chart, this one looks like a pretty safe play in my eyes, and I would also consider going with this because I do like Bngo, and I would be happy to have 100 shares. Now, when you look at it though, you're looking at a total of a potential 489 max loss, because you subtract that, you take that from there, it would be $500, another even perfectly square number. That's pretty easy. You're looking at $500 minus your profit, so you have a break even of 489. And the same time, this is another one that I really like. I put it to a year, and it barely hits under that $5 strike. It hits under it again in May. Doesn't hit it in April. It hits it once in May, and then since May we've been trading around 7 to the upper 5s. We hit here at about 512, 514, and we had a pretty clear bounce. It looked like it's steady trend upwards. So we hit that 514. It seems like we have a decent support, a little bit over 5. So that seems like a very low risk in my opinion. And yeah, I mean, that's another one that I really like. Now let's go to the next. Now this was one I was thinking about, but then I saw that it was a $10 max profit for a $700 and something loss. The break even is 740. It's such a low it's a $10 profit, just like Ford and Indi, around a $10 profit. But when you look at the time, the purple circle here, when you look at that, you've got 15th of October. That's quite a ways farther out. So there's definitely more risk to this one. And you're holding it for longer just for that $10. So to me, I don't really like this one as much. I would definitely prefer to actually, for this one, I would go with the call. I'd actually buy a call for this for 17th of September. Now you're looking at a $50 cost, and you're saying that Indi is going to go to $10. So we've been seeing that $10, hitting that 10 and dropping under, hitting it and then dropping under. We've got the new analyst price targets of 18. So say I was to buy this for $50, this would mean that I will, if it hits the strike and executes by the time the expiration is, you are looking at buying 100 shares at $10. So I'd be buying $1,000 worth of shares. It would actually be a $10.50 break even because $1,050 the original cost of this contract. So basically you're looking at $10.50, $1,050. Now say this stock goes up to $12, you're looking at a $150 profit on those 100 shares. See, now a $12, sure, that's all-time highs. We haven't seen that yet, but you're also holding out until close to the end of September. It seems like a pretty good chance and a pretty good risk that I'm willing to take. When you look at Indi, we actually kind of went up after hours, so this likely will be a very different option. It'll probably cost a lot more because it's right almost at that $10 strike. So this is just more of an example, guys, but maybe pre-market it goes down and we come back to kind of that 965, and then you might want to place that option down. But yeah, I mean, this is just a quick video, guys, about how to sell some cash secured puts, some easy money, very low risk in my opinion. But always, guys, do your own due diligence. I'm just a guy on YouTube and I'm brand new, so if you guys don't mind hitting the like, hitting the subscribe, I really appreciate it. It definitely helps my channel out a lot. But thanks again, guys. Thanks for sticking through. Hope you guys have a good trading week. Bye bye.